Hi guys, welcome to the SavvyMoneyShow. Me, host Sean. We'll be talking about Palantir and ticker symbol VCVC later, but we're going to start with Jumia and the earnings. So, what funny earnings. It dropped 25% and then came back to finish 6% up, so a 30% change in a day. But why? Well, if you go through the earnings, you'll see it starts off good with growth in revenue, huge growth in revenue, and it starts saying how brand recognition in Egypt, growth in Egypt and other places. There huge growth in Jumia Pay. They're trialing new things out, but then the things that make it go down is during the pandemic, the user growth was only 6% for last year, and it's all this user growth. Everyone expects a pandemic, people to be online, and if you can't, as an e-commerce business, if you can't get users online to buy, there's something wrong, and it's either it's the wrong time for Jumia or Jumia are doing something wrong. Now we know from last year that they were doing something wrong in the first quarter last year and the second quarter, and that's why they went up from $6 to $12-14, and then they crashed again back down to $6. If you remember, I called it out at $6 last year, but to tell the truth, you could throw a dart at stock last year and it would have gone up. Now, there is another aspect. Don't forget, this year Amazon has gone into one of Jumia's competitors, so that's another thing to consider. I'll be watching this closely. Palantir. Now, huge growth, huge US growth, going to be accepting Bitcoin. People are upset about the stock-based compensation scheme, but growth companies tend to do that. But what is wrong with it? The thing that's wrong is, although the US commercial growth is amazing, although the government contracts growth is amazing, and I thought the reason they IPO'd was to get away from the government contract growth. Why do I think there'll be profit taking on this stock? The non-US contract growth, something's going wrong there, and seems like they're based most of their contracts in the US. They're not basing anything away. If you remember, I did a video before earnings saying how they will have the NHS contract on their non-US contract growth, but it will not be renewed because it's actually been made law in the UK for the NHS contract not to be renewed. Now, I'm bullish on this. I hold over 100 shares, full disclosure, but I need to give you the bullish and bearish. I'm wondering if, with all this growth, still reporting a huge loss, like increase in loss, if they're sandbagging earnings. They're looking at the market and saying how even if you have blowout earnings, even you know what the CEO's like. He's like, buy my stock if you want, I don't care. But if you have blowout earnings, price isn't going to rise. So I'm wondering if they're sandbaged in earnings and until the market has recovered. But with Wall Street, if you're hedge funds who aren't convinced by this stock, these earnings aren't going to convince you. So it's still going to be retail investors in. But that leaves us with an opportunity. If you get profit takers and this dips down to between 15 and 17 again, another opportunity arises. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. VCVC merging with Re were oversubscribed with the pipe. Now, they will have long-term investors from Koch, Mahindra. You may remember that from the Workhorse contract, and Magna. You may remember that from will re-get the Apple car contract, and also Mitsubishi, American Axle, Musashi, and so on. Now, the thing is, I can see massive potential in this. I can see a whole sports built around this. But the main thing about this is that, and I think people are missing with this, is they're classing it as a $3.6 billion company, and they have classed to have expected revenue of 19.1 billion by 2026. So Re have 3.6 billion valuation according to the oversubscribed pipe and merger, and they have already got signed pre-orders of 27% of their expected revenue for 2026 by 2026 of 19.1 billion, which gives them a income of 5.157 billion on those pre-orders alone, and that's without the contracts since then. We have the fact that you have the Toyota truck, Hino Motors as a inked a deal. You know, so that will bring in more orders. We have fact that there's my links with the Apple car are Magna. They have signed a deal with Magna, and Magna signed with Apple. Now I think that Lucid will be the brand name of the car, and Re will be the skateboard. And I think this is one that is primed to go, and I'm surprised that it hasn't gone already. If this had been a few months earlier, it would have it would have been gone by now. It would have been $50 to $100 stock, and I'm just surprised it hasn't. Now, I am not the kind of person who jumps on the bandwagon. I do not jump on stocks that people think are cool. I let you know before they're cool, so you get the full run up. We may have to hold them a while, but that is the reason why. You have the I Quit Stocks Brigade, who I said before, because they jumped in when you could jump in, make money quick, and now that they're not making money quick again, they're jumping out. And just because stocks are uncool doesn't mean you can't make money on them. I'm here to help you make money. Don't forget to hit the like and subscribe button.